Hey there, folks. This is Mitch Firestone with Precision Trading Labs in New York City. We are looking at a daily chart of Occidental Petroleum, and this is actually from a couple of weeks or so ago. And this was a nice little swing trade using buying a call that I had with our subscribers and members of our trading community. And so this was an area where we had bought this call on November 4th for about 410. We bought it at 39.70 at the start of this region right here, and then we sold it a few days later up here at around 42. We made about $1.30 on that, which was about a 33% gain in a short number of days. So this was a nice little trade here. So what was the basis for this trade? What I was doing, basically, I was looking at this about a week or so before that, and my eye got drawn to these two regions right here. Um, if you notice right here, price came down, consolidated, and then notice it rockets up there with that very bullish candle. There's a gap there, and then there's some major follow through. Over here, it's kind of something similar, except inverted, of course. Price came down, consolidated, and then dropped very bearishly here. So what is going on in these two regions? Well, if we think about if we think about the supply of shares that are offered up by sellers, we could think of that as the supply of shares. Okay, and if we think about the shares that are acquired by buyers, we could think of that as the demand for shares. And so within this region right here, supply and demand are in balance. And then what happens here is there is a sudden exhaustion of sellers. No one is willing to sell here anymore. And so as a result, what's left in its wake now is only demand. There is no longer any supply. And so as a result, we call this a demand zone here. Okay. And when price returns to a demand zone, quite often there will be another wave of buying. So we can almost think of this as untapped buying pressure when price returns to this region right here. And so that was the foundation for the trade, if in fact it came here. Over here, the same exact story, except turned on its head. Right here, we have what's referred to as a drop base drop formation. Okay, this represents an exhaustion of buyers. No one's willing to buy here anymore. And so right here, where there was a supply and demand were in balance for approximately a week, since we're looking at this daily chart, and there's about 5 or 6 candles in here, for about a week, supply and demand were in balance. And then, of course, there was that exhaustion of buyers. And so as a result, what got left in its wake here now is only supply. And so when price returns here, this is where we would execute a bearish trade. So here we execute a bullish trade. Here we execute a bearish trade. We can express the bullish trade here by either buying the stock, buying a long call, or if somebody likes to collect premium, one could of course also execute a bull put vertical credit spread. Okay. Similarly up here, to basically express a bearish trade, one of course could short the stock, buy a put, or execute a bear call vertical credit spread. Okay, if you want to collect premium. So those are the most straightforward, simple ways of doing that. Okay, so that was the basis for this nice little trade here. All right. So why was I looking at Occidental Petroleum? Well, I started doing this about 3 or 4 weeks ago. I've started to leaf through Barron's. They're always talking about, obviously companies, industries, what's the next thing to invest in, all that kind of thing. So I don't really care so much about their investment thesis. I'm not really building a portfolio here in this program, but what I am doing is helping our subscribers and community members to find short-term swing trades. And so that's what this is. That's what this is all about here. So what I've been doing is leafing through Barron's and then looking at what symbols they're mentioning, and then I look for and try to construct high probability trade setups using the supply and demand lens that I briefly explained to you just now. So that's what I'm doing here. So what I'm going to do here is I'm actually going to flip through and go through some of the potential setups that I found in the November 24th edition of Barron's. Okay, if you look at the pinned content below this video, you'll see that there is a link to the most recent table of contents from Barron's, and you can actually look and see, kind of the articles that I'm referring to here. when I start to go through these setups. Obviously, it's copyrighted material, so I can't obviously share the articles. But you can certainly see if you look at the table of contents, what these articles were generally about from the titles and all that stuff. So anyway, that's what we're going to do here. So let's start. Take a look here. So here is American Eagle Outfitters. I always start at the daily chart, and then I kind of work my way down. So I had started with the daily here, and originally, I kind of saw that there was kind of a sloppy area here, but really on the 2-hour chart, which is what we're looking here, this is actually kind of a high quality zone here, and there's a drop base rally here. So again, this is where the exhaustion of sellers occurred, where again if and when price returns here, this is where we'll be looking to execute a bullish trade. Okay, if you notice right here, I have this ladder here. This is a risk reward ladder, so this represents 1 unit of risk here. So if you actually got the bounce here, this would be a 1 unit trade, this would be a 2R trade, this would be a 3R trade. And so this is how we manage our risk here. Once we establish this demand zone, we place our protective stop a short distance behind. I like to use the average true range and basically a percentage of that in terms of giving the trade a little more wiggle room. That's kind of what my methodology is here. And so this is again the basis, the reward to risk basis for this trade. Also, there is a kind of a sloppy demand zone in here. I'll be looking at that, if and when price starts to pull back here, and I'll see there might be a trade here, but this is really, I think, really where the quality zone is. So what we do is we just set an alert and wait for the trade to come to us. You'll see right here the thesis of the article that they had in Barron's for this thing was businesses for companies that actually generate a lot of cash. There's a thought that, obviously with everything going on with government shutdowns, the interesting activity in the White House, everything that's going on in Washington, inflation, all that kind of stuff. There's a lot of volatility, and so the thesis of this article was companies that generate cash is a good thing. Again, I don't really care so much about their thesis, but the fact that it just got me to look at this symbol and some other symbols that I might not necessarily look at is, obviously a good thing. So at any rate, that was the thesis for looking at that symbol. And then, so anyway, that's the setup. So again, we could buy a call, obviously buy the stock, do a credit spread, and of course, any number of other option plays are open as well. So anyway, but pretty much they're all predicated on a pullback to this region. At that point, then we would express a trade at around 1675. All right, so that's AEO. So here's another one we were looking at here. This was a company with basically the article was talking about attractive yields. Okay. And so here's where we were when I was looking at this. And so right down here, actually looking at a daily chart here. And in fact, right in here, if you actually went to the weekly chart, this is essentially an institutional level. It may not actually lay out as a weekly chart just because of the way the calendar lays out and breaks up the weeks. But this is essentially when you have an area of approximately 3 weeks of consolidation like that, tight consolidation like this. This is essentially an institutional demand zone, and so this is actually a good place where actually one could, if the numbers work out, for actually selling premium. Because essentially when price comes down here, it's going to have to probably do quite a bit to kind of drill through here and drop below here. So at that point, you can waste a lot of time selling a credit spread here. So that's what I made that note here. So one, of course, could do a bull put vertical spread here. So again, when price gets down to here, we'll probably be looking to do that. All right. So that's that setup. But before I go on, the usual disclaimer: Precision Trading Labs, we are neither money managers nor financial advisors. Everything we do is for information and educational purposes only. And in the case of our subscribers and members of our trade community, we're helping everybody to acquire mad trading skills. All right, so let's get back to the charts here. Um, Next setup we were looking at here. This is for those of you who are audiophiles. This is Dolby Labs, and so right here there was an article in Barron's that couple of analysts had actually raised their guidance on it and raised their price targets, and so I identified two zones here, one a supply zone here, one a demand zone here. Again, I don't really care about their trade thesis in terms of the article. All I was interested in doing is basically analyzing these charts in order to find trading zones, and I'm really kind of didn't really care whether it fit with their article thesis or not. So right down here, here's a demand zone where we're waiting for a pullback here, at which point we would execute a bullish trade. If we ended up getting a rally up here, this would be we would execute a bearish trade here. We can see generally we've been in a downswing here. And then right here, after making a series of lower highs and lower lows, we've actually broken out of that. So we'll see if, in fact, this is actually breaks into a confirmed uptrend. If it does, then at that point, then this would represent a counter trend trade. On the other hand, if we get a pullback here, and if it continues on up, it makes a new high and then pulls back, then this will be in fact a correction in the context of an uptrend. So we'll see what happens here. But at any rate, here's where we get into a bullish position here. Again, by looking for a bounce, we either buy the stock, buy a call, or again we can sell premium down here, and of course up here this is where we could short or buy a put. So that would be the thesis for that. Another symbol we were looking at here, we were looking at Dell, and in fact they had this big article about actually looking at buying Dell because it had all the various attributes here. The interesting thing about Dell is if you look up here with next earnings date, this is now. And in fact, what I'm going to do is I'm going to go to the live chart here because today, in fact, is November 25th. So theoretically, this should have already happened. So I'm going to take a quick look here at the live chart, and we'll see what we have here. So let's take a quick look at that. Okay, so here is Dell. So what I did here is we're actually looking at the 2-hour chart of Dell here, and what I did was I've obviously turned on the extended hours here, so I can see the pre and the post market. So the regular red and green candles, these are your regular session hours. This light blue, though, this represents essentially a green candle in the extended hours. So you can see price actually right at the close, they did announce earnings, and this actually came up just about to this supply zone here. So this is a rally-based drop formation here, and you can see the price did come up here. Now I'm not racing to trade this, and in fact, tomorrow's the day before Thanksgiving. I'm really not going to be looking to get into this. But if in fact this thing is hovering, let's just say when we come back from Thanksgiving on Monday, then this might actually be the basis for a bearish trade here. So we'll see what happens when it gets if in fact it heads back to that supply zone after the holiday. But anyway, that's where that was the thesis for that. If we continue on now, let's go back to the slides here. So here is Ford. Again, this is where we are. This is where we were earlier today, and so there is a supply zone sitting a short distance above here. So we have a rally-based drop formation. Price has not been back there since obviously this is only a short number of days ago. Looking at the daily chart here. So this is again where we would anticipate that there is untapped selling pressure that we can avail ourselves of. And so price, we'd be looking for price to drop from here. Here we have a rally-based rally formation. So if price ends up pulling back here, this is where we would get into a long trade down here. All right, and you can see this is another one of those cash generating companies that the article is talking about. So there's Ford. Here's another company here. So right here again, this was another one of those cash generators. Here is a rally-based drop formation. This one so anyway, here's where again here's the risk reward ladder on this. This I would be a little careful of because we're also sitting right in the vicinity of the 52-week high. And so obviously when price comes up here, either it's going to get swatted down quickly, but of course that's also an invitation for price to really just kind of bore through that. So we kind of be cautious about taking that trade there, but it's definitely a possibility. So we'll keep an eye on that. Okay, here's another one. This is one where they talked about these several companies having attractive yields. Okay, and so right here, this was a rally-based rally formation, waiting for price to pull back here, and then this is where we would obviously get in. This one I have mixed feelings about. I like the structure. I like the move here. I like the fact that it's actually sitting. If you notice right under here, that's the 50-period simple moving average. So that represents essentially an odds enhancer here. On top of the quality demand zone here, we also have the 50 SMA, which we can think of as a dynamic trend line. And so when price pulls back here, there is also a tendency at times for price to kind of observe and respect the moving average. And so if you combine that with the demand zone, that generally means that that's an odds enhancer for that. The one thing I don't like about this, and I'll have to think about this, is I would prefer to have my zones in the lower part of a swing for demand. Okay, so in other words, if this in a perfect world, this zone would have been probably like in the lower third here. So the fact that it's sitting right in the middle, oftentimes there's a lot of chop right in the middle of a swing like this. So I'll have to kind of give this some thought when it pulls back. But in a vacuum, I kind of do like this setup here. And so again, there's our risk reward ladder. That's a 1-to-1, that's a 2-to-1, that's a 3-to-1. I haven't actually checked out options yet, but it's quite possible, given it's a relatively low price share. You may not get all that much bang for the buck in terms of using calls here. So we'll see what transpires with that. But anyway, that's NVGS. Here's our old friend Pfizer. This was another one of those cash generating companies that the article talked about here. And so you can see right here, there's a drop base rally there. That was a rocket up there. This move actually came about when the Trump administration announced that there was going to be some kind of alliance in terms of with Pfizer about making certain drugs a little cheaper and maybe distributing them through Medicare. Who knows what's going to happen? But at any rate, that was that rocket up there. If you notice, that was kind of a sugar high because there was a great deal of euphoria from that, and then as fast as it went up, that was kind of not quite as fast coming down, but it pretty much almost gave it almost all of it back. And now you can see we're not all that far from here again. Having said that, if we get a pullback from here, that is a technically qualified demand zone here. We have a drop-based rally there. We have that structure where these are indecision candles in here, indicating that there is a lot of basing going on in there, and then price rockets out of there. So in fact, if we do get this pullback here, this could be a decent bullish trade here. We also have an odds enhancer here. That's your standard deviation daily lower Bollinger Band, and so that if and when price gets here, then that indicates, of course, that price is kind of mathematically very stretched to the downside. Again, I would not rely on something to just bounce from a lower Bollinger Band, which I think some people do believe in. I certainly don't. But when it's in the vicinity of a quality demand zone, then it does become an odds enhancer. So we'll see where that goes. Here's PayPal. And there was a mention in Barron's about the fact that there was a fair amount of insider selling with PayPal. So you can see, obviously, since the beginning of November, so for the better part, pretty much of a month, it's been kind of in a tailspin here, dropping from a little less than 80 down to about 60. So that's kind of what is that, 20 bucks? So that's about a 25% haircut that it's taken from here. So right up here, though, we do have this rally-based drop formation. Also in here, I was looking In fact, in the 2 hour or the 1 or 2 hour chart, I think there actually is another supply zone in here. So I'll be refining that and sharing that with our subscribers. So we'll see where that heads. But that's a supply zone here. We could express a bearish trade. And then lastly, we'll take a look at Whirlpool. So there was an article about David Tepper of Appaloosa Investments. I believe he's also the owner of the Carolina Panthers. Obviously, he's a big deal in the financial and investment world. So there was a story that he, in fact, was buying up shares of two or three companies, one of which was Whirlpool. So here's where we are now. So right in down here in the 2 hour chart, we have a drop-based rally formation. So if in fact we do get a correction back here, it would have to drop obviously about $6 to get from about 76 to 70, but this is where we would buy. And then up here, there is a rally-based drop formation. This is where we would actually buy a put or look for a bearish trade. I am going to look at this a little more carefully though. There is a lot of trading going on right at this level here. It's a bit above here, so I might not actually be all that hot about this level. But the demand zone here though I really like here. So at any rate, so that's what I got. So what I'm going to be doing is later this week and going forward, in addition to going through the new setups that arise out of Barron's, I will obviously be giving progress reports and results for all the setups that actually trigger. So stay tuned for that. If you look at if you look at the pinned content underneath this video, in addition to the table of contents from Barron's, we'll also see there is a link to the introductory video that I had done where I explain what I'm doing here and also go into a little greater depth about the supply and demand concept that's behind our trades here. So, and lastly, if you please give us a like and subscribe to our channel so that you get notification when the next edition of this series where I basically go through this and follow up on all this. But at any rate, thank you very much for joining me and thank you for your time. This is Mitch Firestone with Precision Trading Labs, and I will see you next time. Take care. Bye-bye.